Right, hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Thank you for coming in. Thank you to FX Street rather for having me again for another week. Um, can I get a quick hello that you can hear me and you can see my screen as well? If administrator could just give me the heads up. Yeah, okay, fantastic. Okay, brilliant guys. So my name is Zaheer Anwari. I am a long-term trend trader. So my webinars tend to be from a very different angle that most people tend to be accustomed to, and for that reason, it doesn't generally resonate with a lot of people, and that's because people are usually looking for a quick fix when it comes to trading, and that's where the idea of day trading and scalping comes in. People wanting quick money, people having the sort of 9 to 5 mindset when they come to trading, which is trying to make money on a daily basis or a weekly or a monthly basis. Trading is a skill that has its own unique skill set. Rather, excuse me, trading is an art that has its own unique set of skills that one must learn to develop and understand. And if people start stepping away from the lower time frames and start looking at the bigger picture, they'll find a style of trading that is far more relevant to us as private traders. A style of trading which, of course, there's the education phase, which can take a few weeks. But once you get through the education phase, it's a style of trading that can be adapted around your lifestyle. Most people have jobs when they come to trading, which is a reason why day trading is not always suitable. Having two 9 to 5 jobs running parallel to each other, so the job that you're in and having trading as well running side by side as a day trader, it's a very difficult lifestyle to have and to manage. So by stepping away and looking at larger time frames, you can adapt trading around your lifestyle. Day trading is very stressful. Trend trading, long-term trading, there is no stress because there's low risk for high rewards, and ultimately it takes minutes a day. So that is pretty much the background that I come from. I come from a style of trading. I come from a background of software engineering, photography, teaching English, and through that journey, through that evolution of one career to another, I then went into trading. And something that I got particularly fed up with was compromise. If you want more time, you compromise on money. If you want more money, you compromise on time. Sometimes you compromise, or a lot of people tend to compromise on their passion as well. And I found that trading allowed me to really take complete control of my time. So this is really the background that I come from, guys. I'm a long-term trader, and I highly advise you all as private traders to start looking away from lower time frames and start moving your trading up to the larger time frames. Okay, and in these webinars, I give people a very clear idea of how I do this. I give people some of the tools and the techniques that I use, and then some of the currencies that I'm in, currencies and stocks that I'm in, and potentially currencies and stocks that I'll be looking to trade moving forward. Okay, so beyond this, if you want to take things further from beyond this webinar, then there's 2 ways. First of all, I'm giving out this ebook, which I get a lot of requests for. So as you can see, this ebook was written by Anne Chapman. She's the amazing lady that taught me how to trade, and it's very much a complete guide here. It's the almost complete guide to trading. Guys, don't forget to focus on this word almost. This isn't the answer, but this will get you a good way to understanding what trading is about. So it's an introduction that goes all the way through to a trading plan, and it's a good 60 odd pages of detail. This is a groundbreaking ebook, guys. You're not going to find anything like this out there on the internet in terms of technical analysis and trading and understanding how to break down a chart from the perspective of a private trader. And this is really, really important. A lot of people get caught up in the fact that this person is an ex-hedge fund trader, or this person is an ex-Goldman Sachs trader or ex-institutional trader. Those guys that come from backgrounds of institutions, A, have played by government rules and regulations, which is not relevant to us as private traders, and B, those guys have traded with millions and billions of institutional money. As private traders, we come in with thousands of pounds. Trading with millions compared to thousands, a very different style and a very different approach. So you want to see through all the marketing, all the little techniques that people use to rope people into courses. You want to get away from that and focus on what it is you want to achieve, and that is you want to achieve consistency as a private trader and get the right person to teach you how to do it. Don't get caught up with the fallacy of all of these terms. It's not relevant to us. Okay, if you want to take it beyond this webinar, then we have a community of private traders that you can be a part of. This costs £99 a month. You get strategies, you get community support videos, you get tons and tons of information for £99 a month. You've got to start investing. You've got to start looking away from free software. Trading is a business. You've got to start stepping up, guys. Okay, let's move on. Let's actually start getting into the charts. Okay. Oh, by the way, to get access to that ebook, you guys can email me on zaheer@zaheeranwari.com. I will be putting that email out again, but it's just my name, zaheer@zaheeranwari.com. If you drop me an email, put FX Street ebook in the title, I'll get the ebook sent out to you. Okay, so as a long-term trader, I have a particular setup. First of all, excuse me, guys. First of all, I have a watch list on the left. I have the monthly chart on the top right, weekly chart bottom left, and daily chart bottom right. So notice I'm not going down to intraday timeframes, 4 hours, 1 hour, 15 minutes. This isn't entirely incorrect, but this is a place where you guys should start. Now, as you get more experience, you can then learn to go down to a lower time frame to find an entry point. But you still want to be in that same trade potentially weeks or months later if it's still going in your favor. What the most important aspect of trading is actually the exit management. Of course, things like risk management, finding good entry points are key. But once you're actually on the right side of the trend, you want to make sure that you can take the whole trend. And so it's the exit management that's crucial. Most people have tight stop losses, and because they have tight stop losses, they're continuously getting stopped out. Most people want instant gratification. Once they're in a trade, they want to make money. They don't give a trend the time to develop. They won't allow the trend to go against them if necessary. Think about it, guys. What is a stop loss? A stop loss is ultimately an area where you're saying, I'm happy for the price to go against me, for the trend to go against me before going in my favor. So you've got to have a well-placed stop loss. And this is dependent on the unique characteristic of each instrument, whether it's the euro dollar or the pound Japanese yen or the stock of Apple. Your stop losses have to be based on the characteristics of whatever you are trading. Okay, so forget intraday timeframes for now. Focus on the bigger picture: monthly, weekly, daily. Watch lists. It's an extensive watch list. Aussie dollar, US dollar at the top, goes all the way down to the South African rand, Japanese yen at the bottom. So you can see it's an extensive watch list. I don't have just one or two currencies. I don't just have a group. I have everything. And the reason for that is because I can then narrow down to where the money is. If you focus on just the euro dollar, you're going to be trading a lot of the times. You're going to be trading in periods when there is no money to be made on the euro dollar. It's just range bound. The market does three things: either goes up, it goes down, it goes sideways. If it's going up or down, these are known as trends. If it's going sideways, it's known as a consolidation. You want to be staying out of consolidating markets. It's a fallacy to think that you can make consistent money trading consolidations. You cannot. 95% of traders fail. The reason for that is because they don't know when to trade and they don't know when to stand aside. This is one of the skills of trading: understanding your market conditions and knowing when market conditions are optimal, where you have more chance of making money than losing money, and understanding when market conditions are not favorable, when you have more chance of losing money than making money. You can't make money every single day. Day trading is a fallacy that's been created by brokers so that you pay for spreads and commissions every single day, and they minting it while you're not. You've got to think about these things. Okay, so by having a big watch list, we can then narrow down to the group that are in trend. So maybe all the Aussie currencies are in trend. Then the money leaves all the Aussie currencies, and then all the euro currencies may kick into trend. And remember, when a group is in trend, they can be in trend for weeks and months at a time. So they may be the only group that we may be looking at. So all the other currencies on this watch list get dismissed. So that's how easy it is to manage a big watch list. Right, monthly chart is where I have my support and resistance levels. So first and foremost, I have these pink lines. I'm just going to remove that for now. Now, what do these pink lines represent? So if I just go back into the back end of my database, you can see of my software, previous high, previous low of the previous calendar year. So that is the high and that is the low of 2015. We're in 2016. That is the high and that is the low of the previous calendar year. Guys, remember, that's January to December of 2015. Now, why are these pink lines relevant? Because it starts helping me understand what kind of market conditions we're in. Remember, trading is about understanding your environment. It's about understanding probabilities. It's about having an edge. It's about having an edge, guys. If you do not have an edge, excuse me, if you cannot explain to me what your edge is, you do not have one. And if you do not have an edge, you'll get eaten by someone who does. You must have an edge in trading and it must be clearly defined, which is all part of your trading plan, so that you know exactly what environments you should be trading in. These pink lines are one of the first tools that I use to help me decide what environment I'm in. So if price is inside of these pink lines, I stand aside. I'm not interested in trading. And generally, instruments that are inside these pink lines are in a consolidation. This is the Aussie dollar US dollar monthly chart. You can see very clearly, if I just move it back to here, this is a trend. Excuse me, guys. I'm just going to grab some water. Bear with me 1 second. Okay, that's better. Okay, so you can quite clearly see here is a trend. 0.95 to 0.7. So that's a 2,500 pip trend to the downside. Since then, the market has just been going sideways within 1,000 pip, approximately 1,000 pip consolidation. It's within the pink lines. If price is above the high, it has a bullish bias, and if price is below the low, it has a bearish bias. It's as simple as that. So any currencies or any stocks that are inside the pink lines, I can dismiss. So I can very quickly go through my watch list and I can dismiss currencies with ease. Aussie dollar, Canadian dollar, inside the pink lines. Aussie dollar, Swiss franc, inside the pink lines. Aussie dollar, Japanese yen, retesting the pink line. Aussie dollar, New Zealand dollar, inside the pink line. So which currencies are outside of the pink lines? Well, let's have a look at some of the pound currencies. Pound dollar, bearish. Pound Aussie, bearish. Pound Canadian dollar, bearish. Pound Swiss, it's inside the pink lines based on the extended wicks here from last year's peg, when the Swiss National Bank removed the peg against 1.2. So the pink lines are quite wide, and so for that reason, I'm not looking to trade the pound. I wouldn't be trading the pound Swiss franc until it breaks out of the pink lines. Pound yen, bearish. Pound kiwi, bearish. Okay, so you can see how easy it is to start looking for currencies that are worth trading. Let's have a look at the US dollar Swedish krona. This is one that's on my watch list. You can see now it's just broken out of the pink line and we're starting to see a bullish trend establishing itself. Now, the last time I traded this was back here, 2014, 2015, this bull run, where I made very, very, very good profit. You can see how long it was in trend for, several months. After every trend, the market consolidates. So we had a natural consolidation. What we're then waiting for is a breakout. When the market breaks out, it's down to the forces of the market. That's not anything we can control. But while this is in consolidation, another currency or another stock will be in trend. This is fundamental, guys, to managing a watch list and a portfolio. If you don't know how to manage a watch list or portfolio, you'll never, ever make consistent money. Focusing on the euro dollar every day or gold every day just because it's something that you have an attachment to, it's not the way forward. In trading, your attachments should only last for as long as you are being paid. As soon as it stops paying you, you've got to get out and find something else. In addition to that, if only 5% of traders succeed, that means there's a whopping 90 to 95% of traders that don't make it. And if they are all trading the euro dollar every single day, what is that telling you about being on the euro dollar? You've got to understand where the money is and how to manage a watch list and a portfolio and then alternate. from one trending currency or instrument to another. Okay, now let's move on. In fact, I'm going to move to the Aussie dollar, Canadian dollar for the next point that I want to highlight, which is these levels here. These are major pivots, major levels of support and resistance. Now, in trading, you shouldn't have any subjectivity. You shouldn't have any doubts of why your analysis is the way it is. You've got to be very clear with your rules. Remember, as private traders, we are at a massive advantage. We do not have government rules and regulations that we need to follow. What does this mean? What this means is that you have to create your own rules and regulations. But private traders, A, are not very good at creating good rules, and B, are not very good at following them. What you want are proven rules. You don't want just random rules. You want proven rules, rules that were in play from before the internet was created, that were used by old school traders. The only difference between old school traders and new school traders like us is that we have software, whereas old school traders did everything by hand. But just because we have software doesn't mean we have to lose the essence of what trading is about. And that is why private traders are being forced onto lower time frames. We still need to preserve the language of what trading is. Okay, so you can see here now for yourself that I have this red and green line which highlights major pivots, and you can see how this bar here at one point had come through the this major pivot, which was then acting as support, but then was pushed back down again. So you can see how relevant these support and resistance levels are. These aren't just fluke levels. For a lot of people, their support and resistance levels are just drawn on a hunch or a feeling. You've got to have clear rules, and you can see how these work. Okay, let's go down to the weekly and the daily. Weekly, I use the 200 moving average to give me the bias. So if price is above, it's a bullish bias. If it's below, it's a bearish bias. I then use the 50 simple moving average as an area of support and resistance. So in a bear market, I want to see price below both of these moving averages. Or in a bull market, I want to see price above both of these moving averages. I have the exact same logic on the daily time frame. So I've got the black, which is the 200 simple moving average, and the blue, which is the 50 simple moving average. So now, guys, if you think about it, we can put everything together. And this is now how we can start building an edge. So first of all, I want to see, let's go to a currency that this looks a lot clearer on. So let's go to the Swedish krona. I'm not in this as yet, but I'm looking to enter at some point. Right, so we can see that price is trading outside of the pink lines. So we have a bullish bias on the monthly. We can see that price is trading above the 50 and above the 200. So we have a bullish bias on the weekly. We can see that price is trading above the 200 and above the 50 on the daily. So we have a bullish bias on the daily. Monthly, weekly, and daily, they are all bullish. And for that reason, this is now a currency that's looking very, very attractive, and one that I'm looking to enter at some point in the future. Now, if we look in more detail, directly above price, we have this level of resistance going back to 2009. And so for this reason, I'm not looking to enter this particular currency until it's cleared this resistance. Once it's cleared, I will then start looking to allocate risk, and I'd like to see price move towards 11, which is the high of 2001. And if it clears 11, move on to 12, 13, 14, 15. I look for round numbers. I look for price to target round numbers. This is a natural feature to price. If you look at this floor here, it's at 6. If you look at this high, it's just above 9. But if you look at the closing price is at 9. The fact that this broke through is all part and parcel of price action, but the closing price is around 9. If you look at this pivot here, it's at 8. If you look at these two levels here, it's around 7. So round numbers are psychological levels that price likes to move towards. Think about it, guys. It's the same example I use week in, week out, but it highlights the point I'm trying to make. If you are jogging and and you've gone past 11 kilometers, so you're now at 11.1, 11.2, 11.3, you're going to try and make it to 12 kilometers. If you go through 12, you're going to try and make it to 13 kilometers. Psychologically, we like to move towards round numbers. And if it's human emotion and human psychology that's moving the market, then there has to be an element of natural repeated patterns that the market likes to do. And one of those is that price likes to move towards round numbers. And if you go to any chart, you will see the same thing happen again and again. The distance between round numbers, guys, is 1,000 pips. Okay, so if price clears above this, I'll be looking for price to move towards 10, 11, 12, 13, etc., etc. And you can see now that this is looking very, very interesting. We're having alignment. Now, notice one thing, guys. So if I just move back price to the last time I traded this, you can have a look for yourself. This is the last time I was long on the US dollar Swedish krona. Look how clean this trend is. Neat, clean, linear trend from April 2014 when it broke out all the way through to April 2015 when it broke through the 50 moving average. And you can see how well the 50 moving average acts as a support level. This is significant, guys. Okay, so it's happened in the past. What's happened in the past is there's a very good chance that it can happen again in the future, and we're now starting to see that. Since the bounce off the 200 simple moving average, we can see how this is now starting to move in a neat linear fashion. It's these pullbacks where people panic. And that's because people lack an understanding of the natural rhythm to price. Price doesn't move in a straight line. So two things you need to embrace, guys, that price doesn't move in a straight line. And secondly, the importance of wide stop losses. Because if this is going to pull back and you have tight stop losses, you're going to be repeatedly stopped out. So go back to the drawing board and try and figure out why you're not getting the consistency, and try and then adapt to the market as opposed to trying to adapt the market to you. Okay, right. The other thing to note, guys, is the moving averages. Look how they're starting to angle up. The 50 and the 200 also suggesting that we're having momentum to the upside. Okay, so US dollar Swedish krona, definitely one on the watch list. Now let's have a quick look at the euro dollar. Okay, the euro dollar, you can see for yourself, it's still very much inside the pink lines. I've talked about this week in, week out for months now, almost 2 years. So the last time I traded this was this bearish trend to the downside, a very, very good trend. This was a trend from 1.4, again, round number, to 1.1, round number. So that's a move of 3,000 pips. By the time I exited from my positions, I had closed off 5 compounds, which I held for 9 months, and I exited with 15,500 pips, which grew my account by 55% over a 9-month period. Since then, the market's just been going sideways. So if I kept hold of the euro dollar, or if I kept trading the euro dollar, I would have made losses. This is where I exited, and this is where I stood standing aside. Now look at what's happening. We're seeing momentum to the downside. It's trading below 1.1, but until it clears out of this consolidation, I'm not looking to trade this. If we go to the weekly, below the weekly 200, but if you look at the 50, it's below the 50, but the 50 is still quite flat, telling us that we're still in this long-term consolidation, which has been in place since I think it's March of last year. So long period of consolidation. Look at the daily chart, below the daily 200, below the daily 50. So we do have alignment between the weekly and the daily. Bearish, telling us a bearish, overall bearish market. But if we look at the monthly, we're inside the pink line. So this isn't something that we want to trade until it breaks out. However, momentum to the downside is looking very interesting. Okay, euro pound. Have a quick look at that. Now, the euro pound is a currency that many of my community members were long on, and they've been stopped out with this correction to the downside. Again, guys, look at where it's failed. This major pivot resistance, round number 0.9 resistance, and we've now seen price come back down to below this resistance as well. Still bearish on the weekly, above the 200, above the 50. We had a golden cross as well. So still a bullish bias rather on the weekly. And if we look at the daily, We're above the 200, giving us a bullish bias, but we're below the 50, acting as resistance. And so it was around this area here where my community members were stopped out of this particular currency. They'll be looking to get back into this. I mean, the overall bias is still bullish, despite coming below 50. It's still bullish. A break above this high is when price will suggest a trend continuation, and this is when we'll look to get into the trade. At the moment, the pullback, you can see it was a bit of a consolidation. So it went sideways, and then we had a pullback. So this isn't a very clean pullback. This is a messy pullback, and it's not a pullback that I would like to trade. So this is setting up now for a breakout. Okay, let's have a look at the pound dollar. I was short on the pound dollar. I tightened a lot of my stops around the election. After the election was announced, the US election, after the result rather of the US election. So when Donald Trump was announced as the new president of the US, that's when I tightened my stop losses, because if my anticipation was that if Trump would come in, then the pound would gain strength, the dollar would weaken. If Hillary came in, the pound would continue to weaken and the dollar would continue to gain strength. That was my general idea. That wasn't me second guessing, and that's not what I was guessing was going to happen. That was my general philosophy and approach to the market based on all the news, etc., etc. So I simply allowed the result to come out. Once the result came out, I then tightened my stop loss when the market started reacting, and so I then managed to lock in more profit than I potentially would have given away. So if you look at the pound dollar, I was short on the pound dollar from 1.4. It came to the 1.2 support level, and you can see that during the time since the release of the elections, this has pulled back. And I was stopped out, I believe, on this green bar here. So all my positions from 1.4 were stopped out around this level here. And I made a good profit. It's not given the length of this consolidation in between, it's not profit that it's not the most profitable of trend I've been in, but that's trading, guys. I don't know how long a trend is going to be in play for. I'm simply going to trade according to my rules. I'm going to trade according to my trading plan. I cannot preempt what's going to happen next. Now, in an ideal world, I would have liked to have seen price break and close below this support and suggest a trend continuation, but instead it's pulled back to where? The 50, and it's now bounced to the downside. You can see how the 50 is reacting. Now, this isn't to say that this can't go back up again and head towards the 200 moving average. We don't know what the market is going to do next, but looking at the overall sentiment of the market below the pink line, so it's bearish. Below the 200, below the 50, it's bearish. Below the 200, below the 50, it's bearish. Everything is suggesting bearishness. But if the elections hadn't come out, or if we weren't in a period of election, I wouldn't have tightened my stop losses. I would have left where they are. And if I hadn't tightened my stop losses, this may not have happened. We may have seen weakness to the downside, but I reacted according to a unique event. So now, what am I waiting for? I'm waiting for a break and a close below this pivot support, and this is when I can then start adding more positions. This is when I can look to enter and then start adding more positions if price continues to weaken. And where would I like to see the pound dollar go? Well, if I compress this, I would like it to go towards this low, which is the figure 1. So we're looking at a move of 2,000 pips, and through compounding, a move of 2,000 pips, and with multiple lots depending on your account size, a move of 2,000 pips can equate to anywhere from 7 to 10,000 pips plus. And I can tell you this from experience. Okay, so pound dollar. Oh, and one point that I wanted to mention, I forgot to mention, guys, it's ludicrous to assume that we are in a trend reversal. Look at what this week's bar looks like compared to the overall trend. This is the monthly chart. The trend has been bearish since 1.7 resistance. We're now at 1.2 support, so that's a move of 5,000 pips. Look at this month's bar compared to the overall direction of the trend. To think that we are in some kind of trend reversal here and to be opening up long positions on the pound dollar, it's absurd. It just doesn't make sense at all. So I'm standing aside until price dictates what it wants to do. Right, pound Aussie dollar, again, very similar. Below the pink lines, suggesting a bearish bias. bit of a correction so far this month, but small in terms of the overall direction of the trend. Below the moving averages on the weekly, below the 200 and around the 50 moving average on the daily. So this is acting as a zonal area. What we're looking for is this area to hold strong and for price to come back down again. You can see it's done a pop and drop here, so it came back up, it came back down, and that's because of this area of resistance holding strong. Move to the downside, another bit of consolidation, looking for the next leg down. And all the pound currencies are pretty much the same way. Pound Japanese yen is one that's pulled back much deeper. I've been short on the pound Japanese yen since price broke below these pink lines. I've made good profit. You can see that we're having a bit of a reaction, bounce to the upside, with price now trading above 130 as support and 140 as resistance. So we need to see a breakout below the moving averages, suggesting an overall bearish bias. Below the daily 200 but above the 50. So again, now price is back within this area of consolidation. So I got stopped out around this level here. I'm now looking to get back into this trade when price breaks and closes below this pivot support. So all the pound currencies require breakouts now for me to get back in. Now, one currency I have entered on a pullback is the pound New Zealand dollar, and we can see that price is now creating an all-time low. It's come back to retest this level of support, which is now resistance. Remember, support becomes resistance. We are below the weekly and daily 200, so we have a bearish bias on the weekly. And if we look at the daily, price has pulled back to this level of resistance. So given the fact that price was in a neat trend to the downside, we had a neat pullback, and the fact that it come back to a major pivot, I'm now looking for, I waited for a good entry for a short setup, and price has now triggered me into this trade. I've got a stop loss that will allow price to do what it needs to do. I can see right now that I was triggered into this trade and the market's now going against me. This is nothing for me to panic about. First of all, my risk is 1%. Secondly, I have a wide stop loss for price to even come up to this 1.8 level around this area and then come back down in my favor. If it breaks through 1.8, then I will get stopped out at some point. So I have a well-placed stop loss that will allow price to go against me before coming good. And when it breaks below this level, this is when I will start adding further compounds or further positions. Okay, let me just go to the chat box, see if there are any questions that I have missed. What are the pink lines? I think I've explained them. Okay, thank you from YouTube chat. Okay, I don't know who that is, but yep, thank you very much. The pink lines represent the annual levels of the previous calendar year. So the previous high and the previous low. Okay, it's a really good question. So I've got a question from GumGDO. I hope I'm saying your name correctly. I guess it's a nickname. The question that is asked is there an app to find the pink lines? The answer is you want good software. So these pink lines are programmed into the software. So if I go edit chart, I can manipulate these. So you can see here at the moment, it's showing me the yearly intervals. I can change this and I can click on monthly. You can see now how it's giving me the high and the low of the previous month. Yeah, I can go back to yearly and I want the software to show me all the pink lines in history. So if I uncheck this, you can see how the software is now giving me all the highs and lows, historical highs and lows on the chart. This is my point. This is one of the points that I made at the very beginning, guys, that you must learn to invest. You must start investing in the software. This is eSignal. This is the software that I use. And one thing to be clear here, guys, I'm not affiliated to eSignal. I'm not affiliated to any broker. Most of these trainers and academies out there, they're all affiliated with someone, because not only do they charge you for courses, they also then profit from your trades because they have some kind of affiliation with their broker or from their software provider. I don't have affiliation with any of these guys. What I do though is give you recommendations on what is the best way forward for you as a private trader. I'm a private trader. I come from a normal background like most of you guys, I'm assuming. And so what you want is to be able to resonate and understand what it takes to achieve the status of being a full-time trader. And I'm advising you guys to get away from free software. Get away from things like MetaTrader and whatever the broker is giving you. Get away from incentives like, okay, if you take 20 trades a day, you can have my broker platform for free. Get away from those kind of mindset. Invest in the right way forward. eSignal is by far the best software out there. You can see here it's a composite. Let me just go to where it says composite. Okay, it doesn't say here on my chart, but it's a composite. So what that means is that it's not specific. The data is not specific to a single broker. eSignal get their data from 18 different feeds and then give you an average. So it's a very, very accurate price. Secondly, the advantage to eSignal is that it allows for you to develop proprietary tools that work within their eSignal platform. We've spent over £100,000 developing proprietary tools. We've got an inbuilt money management system. We've got trend filters. We've got entries and exit management all highlighted on the screen. We've got scanners. We've got customized subchart indicators. We've got a tool that gives you an exact entry and exact stop loss and all your target levels on the screen. We've got tools for everything. We've probably got the most tools in the world when it comes to tools that are available within the eSignal platform. To the point, guys, where eSignal actually approach us and ask if we can give away some of our tools as their standard tools. We have more tools than what eSignal provide as a standard to their subscribers. In addition to that, eSignal normally costs around $150 a month. We get a hefty 50% discount through our community. So about $70 a month. And again, I don't profit. I don't get a kickback from the discount that I get at my community members. It's a benefit of being a member of our community. We've had almost a 20-year relationship with eSignal. And so because of that relationship, we are in the privileged position of getting our community members a discount. Okay, so look away from free software. I don't know if there's any software out there that does that. If there is, that's fine. But you may have to draw it manually. And if you have to draw it manually, it's a time-consuming process. Okay, I think that is all the questions, guys. Okay, so as already mentioned, if you want the ebook, please contact me on zaheer@zaheeranwari.com. I will get this over to you. If you want to take it further, if you really want to get to grips with strategies, exit management, compounding, risk management, foreign exchange, stocks, if you want to get to grips with all of that, plus be surrounded by a community of full-time traders, plus have weekly webinars for £99 a month, please get in touch. If you want to follow me on Facebook, I've created a new page actually just last week called City Trader Lifestyle. Don't get that mistaken for me being a city trader. I'm not. It's just me living in the city. So this is a page where I'll be updating it. So you can see this morning I talked about the S&P 500. I'll be talking about stocks and currencies and techniques, and of course I just put up things that I get up to day as well. Okay, so if you want to like this page, guys, that'd be great. We also have our dedicated dynamic trader page. If you want to follow me on LinkedIn, please add me on LinkedIn. I am on Instagram, fx.mentor. Please search for me on Instagram. I'm on Twitter. I don't use it that much, but I am on Twitter. Feel free to message me if that's your preferred way to communicate. But yep, this is everything that I have, guys. I'm pretty much on most forms of social media. Okay, that's me for today. So thank you to FX Street once again, and wishing the rest of you all a wonderful day wherever you are. If you're watching this on replay, the same to you as well, guys. All the best and happy trading, and be smart. Let the setups come to you. All right, guys, take care. Bye-bye.